Hey guys, Akil Stokes here, and welcome to another edition of the Trading Blog, episode 20 for you guys that are counting. Now, originally I planned on coming in here today and doing a follow-up on yesterday's video. For you guys that didn't see it, yesterday I talked about the volatility that may be coming to the market, mainly because of Janet Yellen and her doing her first real talks and testimonials about future monetary policy. She had one today at 10 o'clock and she has another one tomorrow. And kind of the effect that has on the market, I often get the question, hey Akil, how come when dollar news comes out, the pound yen sells off? And we actually had that today. Unfortunately, I was on the losing side of it, but the ripple effect that price action has, or that the ripple effect that news has, I should say, where, if people are buying dollars, they may be selling yen. And when they're selling dollars, they may be buying yen. So it's always an exchange from one place to another, from the stock market to gold, from oil to, whatever. However, I did get a really awesome question during my live trading room today that I think is going to be a better topic. And for you guys that may not know, I do run a live trading room each and every day. Actually, not each and every day, but Tuesday through Friday for 3 hours a day. So if you're a trader out there that is in need of support, there is something wrong with your trading, usually a psychological mistake, and you'd feel comfortable around a community, then feel free to join us. And same thing if you're an experienced trader and you're just looking to be around some other like-minded individuals. I know trading could be boring, so it's easier to spend some time with 50 other traders and have more eyes on the market than just you and your Netflix streaming. Check out some time in the live room. We have a London live room and a New York live room, and we have a free 1-week trial for both. But I got a question today in the live room. It was a trader that said, hey Akil, I've been trading blank and blank strategies for 3 weeks consistently now, and it's been going good on demo. And the plan is to, once I reach 12 weeks, should I go live? And I responded to the question, or I responded to the trader, I can't really answer that question for you because I can't tell you when you're ready to go live. That's something that you have to decide on your own. It's something that you have to say, yes, I'm confident enough, because we know demo money and live money are different. So you have to believe that you're confident enough, that you're past that point of making mistakes, and that you're not going to make those psychological errors when live money is at stake. However, I would say this, for me personally, I always like to base everything I do in trading off of quarters. I don't know why. Maybe that's because I was a former football and basketball player, so we have quarters. Maybe because I was a stock investor and quarterly reports and whatnot were what I used to look out for. But I always like to base everything in quarters, so 3-month periods. So when I was starting off and trying to decide if I was ready to go live or if I can truly call myself a consistent, profitable trader, I would judge my results based off a quarter, because I figure I can get lucky for a day, I can get lucky for a week, I can get lucky for a month, right? Anyone can do that. Many of the people you see on the internet that are making 1,000% returns a month are getting really, really good 1-month returns, then blowing it all. But I figured if I can do 3 months consistently, right, then I can start to believe that it's not just dumb luck and it's actually some skill based in there. So I think 12 weeks is a good period of time. However, I wouldn't jump straight in, right? I wouldn't jump straight into the pool. I'd dip a toe in first, and really treat your trading like a business. Handle yourself like a prop firm. So for example, if you're trading for a prop firm, and prop firm is essentially, for example, I would be running the prop firm. Me and my partners have a lot of money, and we split it up between whatever many traders. All of you guys trade the firm's money. We don't deal with any outside sources, and we grow our business that way. So if you were working for me, you were a prop firm trader and you're working for me, here's what I would do. After you pass my training session, I would give you a small amount of capital. So I would say I would throw $5,000 away and say, Trader X, insert your name. Here's $5,000 that you can trade with for the first quarter. And then after you prove that you can indeed handle that amount of capital, you can still be consistent, you're not going to self-destruct and blow up, your reward, right, after a successful quarter or whatever period, is say another $5,000. Now you have $10,000 worth of buying capital. And now you have $15,000 worth of buying capital, right? That's how I would go about getting into trading. And that's what I mean by dipping a toe. If you plan on opening a $20,000 account for your trading, after 12 weeks of successful demo trading, just don't throw $20,000 in there, right? Allow yourself to trade $5,000 and test yourself, right? Because again, it is a big psychological difference between live money and demo money. So test yourself. Make sure you can handle $5,000 first. If you pass that test, bump yourself up to $10,000. If you pass that test, bump yourself up to $15,000. And if you do well, say for the entire year, then the next year you can trade your full trading capital. And I think that's the best way to go about getting yourself into live trading in a safe way. Because after all that hard work, the worst thing you'd want to do is be successful with demo, throw all your money in there at once, make some drastic mistake and blow everything, and now you're down. At least if you mess up with a small amount of capital, you can kind of go back to the drawing board, fix what you need to fix, and you still have that lump sum of money waiting for you for, when you make your next move. So that's my advice to that trader, and that's my advice to any of you guys out there that were wondering the same thing. So hope you guys enjoyed this episode of the Trading Blog. As always, feel free to hit that like button if you deem it worthy. Please subscribe if you like what you see here. That way you get updated whenever I put a video out. Also, I'm still trying to reach, I don't know what the number is, I think 50,000 subscribers on my YouTube page. I think I'm at 20 something. So I'm trying to reach 50,000 subscribers there. So help me out by hitting that subscribe button. And also share it with a friend. Share this on social media, Twitter, Instagram, Facebook, wherever you may be, and get the word out if you deem this content to be valuable. If so, I'll see you tomorrow. Until then, plan your trade, trade your plan.